6 weeks of gains when it comes to oil prices. How do you think how long can this rally last, Neil?
I think it can last longer. I mean, certainly there was a lot of concern around hard landing in the US and what that could do to demand in the second half of the year. Obviously, what we're seeing now is a more benign economic environment in the US. But what's really making the difference is the Saudi cuts. So Saudi's taken 1 million barrels a day off the market. They've extended that through to September. And when we look at the market, certainly over the next 6 months, we see a supply deficit. So we think inventories will continue to draw and prices are going to move higher, certainly in the second half of the year, relative to where we've been in the first half.
This deflationary sort of picture that we're seeing across other commodities, so you think oil can actually avert that?
Well, what's interesting is that, if you look at hard commodities, what we've seen is the impact from slower growth in China. What we're seeing on the oil side is while consumers in China may not be spending money on properties, they're spending money on mobility, flights, travel. It's really off the charts at the moment. So oil demand in China is really tracking incredibly strongly at the moment, and that's helping to lift the overall global demand picture.
And Neil, David here, just to follow up on that, I guess. I mean, what's the price at which China's buying the oil? Because we're getting also news that some of the deliveries are getting discounted to parts of the region, Asia Pacific, that is.
Yeah, I mean, certainly, Russian crude is still quite heavily discounted relative to Brent. You're seeing $15, $20 discounts relative to some of the key markers. And certainly China and India have stepped up imports of Russian crude. So that's certainly helping, to lower the costs of crude imports. But, for the bulk of certainly what China's buying, it's going to be on international prices. And, of course, you've seen the Saudis raise their official selling price over the weekend, making it, a little bit more expensive.
Neil, what does it mean for the oil majors in China here? I mean, we must get roughly a price from the data they give out in their earnings. And the thing is it better to be downstream concentrated or essentially upstream? What do you reckon here?
Yeah, I still think it's better probably to be on the upstream side of things. I mean, what we've seen is, a pretty muted recovery in China, which has really weighed on certainly demand for chemicals, which is a big part of the earnings of companies like Sinopec. On the other hand, if you look at the parts of the business that are performing a bit better, it's more, the upstream parts of the business. And I think that's going to continue, in the second half. And so I think you probably want to be more biased towards upstream rather than downstream going into the second half.